Okay, now looking for gold and silver. So my idea when I sent you last week, I sent you a screenshot of this, which is the silver weekly chart, and it shows this triangle. I noticed this is also Elliott Wave International's count on this now of a triangle A, B, C, D, E, and this is, when you get this kind of capitulation move, it just, it's easy for an Elliottician to, to see it pretty quickly as a thrust out of a triangle. So we have this thrust out of a triangle. So thrusts out of triangles are terminal. They're terminal. So that means that, when they're done, they're done. And that's the final action in a pattern going way back. So this would have silver in a triangle for 1, 2, 3, 4, a little over 4 years after that late 2015 low in silver. and then the thrust would be the final move. So silver's already thrusted, and it looks like it's thrusted in possibly 5 ways. 1, 2, 3, 4, 5. The only thing wrong with that is that it really doesn't need to be a 5 to the downside. It needs to be an A, B, C. But it's also, and we'll look at the daily chart on silver. We're covering silver first. Because I think silver is sending us a message about gold. And that is, silver and gold typically very highly correlated. That when one's moving up, the other one's moving up, the other one's moving down, the other one's moving down throughout most of history, the great majority of the time. And so here we have silver having thrust down out of this triangle, and now it's looking real bouncy off of that low with a long wick on this weekly chart. Let's look at it on a daily chart. There's an A, B, C. Deeply oversold. Admittedly, that was an enormous C wave. And, there's a potential Fibonacci down around 1102. And let's see back here. Also, 1047, there's a potential relationship of the Z wave to the Y wave. But still, we have a thrust, we have new lows, and then we have a bit of a rebound here, deeply oversold. Let's see what's happening on this sentiment. DSI was down to an 8. We actually just got a reading of 8 right there. That's lower than anything that happened in late 2015, early 2016. Yes, the gold-silver ratio is over 120 currently. Gold is 120 times per ounce the price of silver currently, by far the widest gap ever in history. And that is the very bullish, mainly for silver. Traditionally in history, when it gets stretched like this, it's silver that starts moving the higher percentages. That's why I was talking about AG and PAAS. as those are silver miners, as probably maybe the top two ideas in the mid-tier space, which was kind of the sweet spot in the space. So yeah, things look good. If a person bought here and it got drawn down, I think you could just buy more. I really do on the best of those stocks. But here's my big point, and what I'm going after here is this. If silver has already capitulated and already thrusted out of, given a terminal thrust out of a triangle, why would gold only now thrust down to below $1,000 in gold? If silver's already done it, why would gold thrust down now? So I just think that that count, that very long held count by Prechter, that this was a 5-wave structure to the downside, and that's wave A, and now we're getting we've done with a wave B, and we would get a move down in 5 waves to new lows below the late 2015 lows. I just think that is really, really suspect count now. Why would gold plunge like that here if silver's already made its terminal move to the downside? And even though the spread between the large specs and the commercials is still far apart, in bull markets, they can get pretty far apart and stay that way for an extended period of time. And so even though it's the widest spread ever, and we did get a move down in gold, and we got a move down out of that condition in silver as well, we just may have a situation right here that is just, it's just an exception on that, because the Fed is blowing out the printing machines like they've never done before, and they'll have to do that if they want to control this thing, because it's the heroin that is going to be needed by this highly experienced, long-time heroin expert called the global economy, or heroin addict, is the amount of printing that it's going to need in order to stay in some kind of euphoric state is just astronomical. And that's kind of Peter Schiff often uses that. It's like, if a heroin addict's already highly addicted, they need more and more heroin in order to stay high, in order to get that euphoria. And eventually gets to the point where they need so much heroin that they overdose and die. And that's kind of been his analogy for a long time. I thought it was pretty good. And so the amount of printing is going to be so huge that it's going to cause inflation at a time where many citizens can't take any higher prices. Matter of fact, a lot of the poorest ones might be in the service economy is currently out of work. So it's a toxic combination. And I just think that what they're doing, what the Fed's doing and has been doing all along, is very bullish fundamentally. And it's negative, it's bearish for the US dollar, and we'll get to that in a second. So there's my counts on gold. I'm considering the possibility gold's done going down with this wave 4, and it's already going to get going to the upside in wave 5. So I'm sorry. I know I continue to attack Prechter's count on gold relentlessly, but I know a lot of you subscribe to his work and are looking at that, and it's scaring the living bejeebers out of you, and I understand that. But I don't see how it could be correct based on what silver has already done.